This is Justin AMZN on Monday, March 18th, 2019. With a look at the pre-market, looked like we're pretty much just straddling the 1714.50 price. We're pretty close to Friday's highs, and yeah, let's see what happens as the day starts out. A very massive bullish candle. Doesn't even slow down at our line here, clearly making a new high from Friday. And if you kind of just take a step back and look at this, you got a pretty big move here into resistance, pull back, a move that gapped up, pull back, a big move, pull back, big move. It's just kind of stepping higher with some of these larger moves. I mean, this one was pretty quick from the other day. These were smaller. Here we go again with a big move quickly. Let's see if there's any opportunity for any sort of pullback or sideways stair step to get in on this. We get about a $5, somewhat of an inverted hammer, somewhat indecisive, but all it does is come back down just above Friday's highs. And so this isn't really a reversal. It's just, a little bit of a pause, people taking profits. This is the highest that Amazon has been in months. So anybody who has bought is profitable. And if, after a weekend, you're looking at positions and you're like, oh, hey, look, I can get out of this thing here and be up and, go spend some money on something. I don't know. That could work. Next candle is slightly higher high and higher low, but this is a really nice stair step. Very next candle, also part of a stair step, and again, higher high, higher low. At this point, remember this is just 20 minutes into the market, and we'll look at the options, what some of the options are doing in here, because there were some opportunities to buy. But you weren't going to get a stop way down here below this line. You pretty much just had to bracket this and look for it to just break out and move higher, which is what it ends up doing. Breaks out, the next line here, 1727.80. We just flew through that one, pulled back into it with the very next candle, just a lower wick, continue on higher. Here we go with some more bears coming in with upper wick. But that doesn't reverse. It continues back up. Another candle with an upper wick. That one gets taken out. This thing just keeps on charging up to get to about here. And you get a pullback that's, comes into the 5. Now, this is the first time we've actually gotten below the 5 exponential all day. All day being, what time is it? An hour into the day. And just continues to move up. And here we are right into our line at 1747, a great target on an open right down here. I mean, it didn't even slow down at this line, made it all the way up this one. Very little bit of a pullback. I mean, 2 bearish candles in a row. That's all we got. That's how strongly bullish this was. Now, I'm not saying it's going to stop here, but it's moved nicely. If we look back over on the daily, we are clearly at a new high. We're at a point where we've been able to break above some of these resistances before and kind of paused. So, this is a good place to either tighten up your stop, take something off, or take the whole position off, small inside candles. I love seeing these candles because they just help you get a really nice risk to reward, whatever you're doing, whether it's tightening your stop, whether it's getting in on the breakout or breakdown from these candles. You get a bunch of them here in a row, and then look at that. I mean, if you aren't already out here, or if you're not getting ready to set this up for a move higher, the stop right here, or like the next candle shows, a breakdown right here. I mean, this is the line we've had on here for months. If I click on this, let's see, is it going to show? It was just hovering. There you go. I had drawn this going back to June 20th of last year. or at least that's when we'll put it on the chart. So going back to June 20th at 1747, and it's March, almost March 20th. 9 months ago, this line is contributing to the level we're at today. I mean, how amazing is that to see how these lines are working? Obviously, like I said, this one didn't pause here. We just, charged through it. But if you had, this one line on your chart from 9 months ago and you saw it working today, that carries some weight with it, definitely. So get a bit of a pullback, almost to the 21. There you go, into the 21. I really want to see this pull down a little bit further, but what happens next is pretty crazy. The rest of the morning into the noon hour, completely sideways. We've got a completely flat top right here. It's like something was just selling off at 1740. It could not get above 1740. The high of all these candles is 1740, or really close to it. No, let's see. This is 1740, 1740, 16. Like, there were just bears sitting here shorting this at 1740. I don't know why, but it was really strange to see this. We even get some bearish candles in here, 1740 the high on a bunch of these. And all the while, you got higher lows, the exact same high, excuse me, squeeze forming. This is another place that it's just like up here. It's like, okay, we have a line here. This is where you need to be getting your stop nice and tight, because it's either going to break out, or it's going to break down and hit your stop. Like, this is where to do that. Same thing here. It's about to break out bullish, or it's about to break down bearish. One or the other. You can bracket this. The whole move today has been bullish. There's no reason to go against that. So getting set up with a bullish move, that's what happens, and comes right in 2 candles, moves right back up to our 1747 line. Squeeze is fired. Get this. Look at this. Now, if you had this happen earlier and you're at that exact same level, would you maybe be getting ready to short this right here? Maybe. Pulls back, sideways. Okay. If you had shorted this, you got to move your stop. You got to turn it up, because it's not doing what it did earlier where it sold off sharply. It's actually consolidating right here after this kind of a consolidation. I mean, this is your S curve here. This is about to go higher. What happens? Yep, that goes higher. We make a high of 1750. And I think we're almost at the end of the day. There we go. We just pull right back down in just about at 1740. So this is a kind of a quick S curve. This is your bigger S curve. And then I want to guess that it's going to continue to move up. This is kind of an S curve, bigger S curve, to continue on up. 1750 is the high. I don't know if we're going to get to 1800 tomorrow. We've got a big no man's land here. But if we can get into that range, I would expect it to kind of pause up here for a couple days, because you're clearly taking out any sort of resistance if it moves up that much higher. Let's see. If we zoom back in on the 5 minute, come back over to the 1750 calls that expire this Friday. That initial open, that was really hard to get in on that. Those next 3 candles that had consolidated, you're pretty close to buying like 10 by 9. It would have been aggressive to do that. Maybe buying around 10 and a stop down by 8 would have been a little better. But had you gotten in there, I mean, you could have nearly doubled the option from 10 up to 20. Yeah, that actually worked. 10 up to 20. And then all through here, again, doing something with $100 risk would have been a little bit tough. The low here is 1475. The high is 1545, 1550. I mean, it would have been right at $1. And I don't know if it would have filled on this candle moving up. Maybe getting in on the consolidation here, getting in like, on one of these pullbacks, probably like this one, getting in like 1775 maybe by 1675, maybe that would have worked. You don't know sometimes if a pullback like this would have actually hit a stop just because of the spread on the option. But anyway, this is 17 1750 calls. If you go out a little bit further, 1775 calls. We can see what you could have done here. And these were priced a little less expensive. You're another $25 out of the money. The stair step here would have been a great opportunity to get in, like 475 by 375, 5 by 4, something like that. That would have worked here. That would have continued up, and you could have doubled your option there too. So, 5 up to 10. And then on the pullback here, this would have been much easier to do $100 risk, but would it have actually filled you in here as it's breaking out? That I don't know. On the pullback, possibly getting in like 850 by 750, that does get up to 1050. So that's 2R right there. Looking at puts as we were selling off from right here. That was this with the 1725 puts. Comes down to about 11. It would have been great had the option been at 10. That would have made it like the perfect setup on a reversal right there. But it came down to 11. Came down to $11 exactly. 1103 here. Still could have been doing 11 by 10, or getting in like 12 by 11 as this candle moves, and flip that for a few R pretty quickly. Getting out at like 15. So 12 up to 15, that's 3R. The rest of the day on puts, it got a little bit of consolidation here. Maybe could have grabbed an R out of that, maybe. As it rolled over from here. But again, we're talking the 1725. So 1725 strike, it obviously wasn't going to come all the way back down there. I guess I shouldn't say obviously, anything's possible. But the move we had bullish, this was the move to be in, or this, consolidation and then a breakout was the move to be in. So like I said, if you kind of take a step back and see how we were moving, we got some of these bumps, pull back, a bump higher, pull back. All these S-curves, they just, they keep happening. This was a one-day S-curve. This was kind of a two-day S-curve. Here we are for some morning, afternoon S-curve, and then kind of this one an all day. And zoomed out like this, I'm seeing relative highs and higher lows here. That would help this, move higher. It could gap up again, put in a little bit more of a bearishness initially, come down into our 1747 line, hold that, and do an S-curve up higher. That'd be a great setup. We could also gap down, and I don't know that we'd be trapping so many bulls, just because so many are still profitable. It just might be kind of like a shot across the bow sort of thing for the bears. But a pullback, anybody who's been buying Amazon long-term through here, they're not getting out here. They're holding on for this. They've got their stop maybe down here, maybe up, up below one of these gaps or something. Maybe even here around 1665. That's a good place for a stop right now. That does mean we could still pull back into this yellow line and, look like it's going to do a little bit of rolling over here. But I guess we'll see. We'll have to see what happens. Let's see. We're definitely making higher highs. Finally, looks like something's getting going. So we'll continue to stick with the trend. If you're doing anything counter trend, like I was saying, the bears up here, something so obvious like this, make sure what you do going counter trend is completely obvious. Because even this, like I said, this could have been breaking out. This is a great consolidation. This is 20 minutes of just going nowhere. Make sure if you're going to fade or if you're going to take a counter trend that it's an obvious setup. It's got clear risk reward, and maybe just look for an R, maybe two. This was a 3R move, but it didn't have to be. It could have just been this candle and then sideways without these the more bearish candles through here. But just look at this. I was when I saw this happening, I'm like, whoa, did they like halt Amazon or something? Because this is just so strange to see this on a stock like Amazon. This kind of thing where, okay, hardly anybody's trading it. And that's what happened today. Like the volume, it just drops away through here. It's pretty crazy. So you can see these levels working. You can see this S curve. Go back and back trade today. For what you could have done with your plan, with where you were looking to buy, where you're looking to sell. This was a good day to practice, just because there's so many levels in here that we do interact with. Would have been great had we pulled back down a little further right here. But when it didn't, it's like, okay, just wait for this to consolidate, wait. And even through here, there were people getting in bullish. There were people getting in bearish, thinking that's it. It's going to go, and nothing. And then you do another hour of that through here, which is going completely sideways. Nothing. This was a waiting day. This was take some profits when you got them. If you're way up, if you're at some of these resistances, take profits. I mean, had you gotten in bullish here, take profits here. There's no reason to think it's going to push higher, especially with the stronger resistance here. Now, for everybody who was shorting it here, didn't really amount to much. You got a nice indecision candle here signaling, okay, it's got to break down now, get your stop right above it. And that would have been a good stop placement. Probably would have been trailed out on something like this, maybe a very small gain. Would have been a larger gain had it rolled down and come right back even to here, or continued with the lows here and pushed to 1727.80, but it didn't work out that way. So the better way to trade this today was sticking with the trend, getting in on some of these pullbacks. Like this is a really nice hammer right off the 5, 20 minutes of buying right into resistance. That's a great setup. Even right here, it seems late, totally could have been. If anybody had been buying, let's say you bought on this candle, so that's 940. Let's look at the calls. Buying at 940, you're buying in this candle. I mean, on the 1775 calls, that would have worked. Just getting in anywhere in this candle. Let's say you got in at 7, a stop down at 6. That would have worked up to 10. That could have been 3 Rs right there, at a decent risk, $100. It's just sitting high, But that's the thing with some of these moves is they're just going to continue. Even this one, the range was 99 cents. Could have been taking this on a breakout. Now that would have been a little bit more aggressive because you would have had to get in above this candle. So maybe you got in at 1525 and a stop down at 1425. Now that worked, but that's not really a true $100 risk. Just like down here when I was saying buy at 10, stop at 9, technically it would have been more aggressive of a setup to do that. It would have worked great. This one would have worked great. But on a day where it's, just kind of choppy, that probably would not have worked out too well. It just worked out so well today because it was so bullish, And the options, I mean, there wasn't really a great pullback to, on previous level. This here at 935, this low was taken out by this bearish candle. It looks really similar. The stock and the option look really similar for where this pullback was. It's not like it's way down here, like down at 9 or 10, giving you an opportunity to get in at this price. That didn't happen. But after this initial kick down, the lows of this consolidation actually held this low pretty well. So this low being 1360, the low here 1382. So even though we put in the low here, there was opportunities to buy at this candle through here and just wait for it to plug higher, and it did. So hope that makes sense. Hope that's something that you can do during the day on your own, and this kind of stuff makes sense for how to trade. So we'll be back tomorrow with a look at what happens on the 5-minute. Hope you enjoyed this one. This is Justin Amazon. Thanks.